How's it going, peeps? Welcome back to Viva La Coin. I am Joe. I will be your host for today's episode. And what we're going to cover is a little bit about savings and how you can earn money on the money that you already have, which is something that most people don't really have access to in the current setup of our economy. And I'm going to explain why that has diminished over the course of time and what you can do right now to take advantage of a couple different things in the decentralized finance world to flip the script and to start earning back money on just the money that you have saved outside of investing or anything else, in how that can benefit you. Now, ultimately, I am not a financial advisor. If I were a financial advisor, I would tell you to, I'll pull Warren Buffett. Go and buy a farm and raise livestock and sell them as assets, because that's where real monetary gains come from. Or maybe if I'm a billionaire, I could just toss my money around. It'll just accrue. But for most people that could barely even afford to pay an emergency expense that's $1,000 in this country, that's completely insane to even make that recommendation for people. Most individuals, if they were to earn money, they used to do it by having a high yield savings account, which means they would take their money, put it in a savings account at a bank, and the bank would pay them a certain percentage over the course of that year in order to borrow said money that you put in the bank and loan it out to the other bank patrons, whether in the form of withdrawals that they have, loans that they do, etc. And then you can always withdraw your money, but you earn just for keeping it there. And I'm sure over the course of time, your parents or grandparents probably told you when you were younger, hey, put your money in the bank, put it in a high yield savings account, you'll make money on that money. It is such a good way to go. Well, that's not the case anymore. So let's go ahead and jump into some of this information. But first, I wanted to start with a quote from our dearest recognizable friend here, Albert Einstein. And let me go ahead and pull up his quote here. I want to make sure I'm not blocking anything. So Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it." Now, compound interest is more or less where you're doubling your money every time it's going through something, or you're earning additional interest on it. In this case, we're just earning money on the money that we already have. And a lot of wealthy people understand this, and that's how very rich people tend to continuously get richer. But it's tough when you don't have a lot of money to compound interest on practically nothing. So over time, that ability for us to earn money has diminished even further. And oh, look, he even got the flow going. I kind of got the Albert Einstein hair going now. I promise I'm not trying to emulate him. But let's take a previous look at our historical interest rates that we get from banks on our CDs, which are just certificate deposits. So CD is just your savings account. And let's see how we're faring currently in our society. So decades ago, average CD yields exceeded 10% APY. Well, too bad we're shit out of luck. You won't find a return anywhere close to that today. In fact, as of December 2nd, 2020, the average one-year CD had an annual percentage yield of just 0.24%, Bankrate survey data shows. The Federal Reserve began cutting interest rates in the second half of 2019 to sustain an ongoing economic expansion. And when COVID-19 shook global economies, the Fed quickly brought benchmark rates to near zero levels to provide fuel for recovery, as if they weren't low enough and as if that helped us recover and we weren't printing trillions of dollars. Because keep in mind, we operate in a debt-based economy, which means that $1.9 trillion that was printed, that's not like new money, that's just debt. We printed that and then we put that on our balance sheet as a country and just increased our $28 trillion worth of debt that we have further. That's how we do it. We create debt and we call it money and we divvy out that debt to other people. So right now, if we look at over the course of history, I'm sure my face is probably blocking the bottom corner of this chart, but I assure you it gets nice and low. Back in 1984, we were still around So some even up to 12% if you have your money in there for an extended period of time. And over the course of the past couple decades, we are down to basically nothing. 0.24%. That's not 2.4%. 0.24% is laughably insulting. That would be if I have $1,000 in the bank. I'm barely making anything back on that money whatsoever. So now it's going to continue to, what do? Go down past zero? Maybe. They were having some talks over in Europe about negative interest rates. Wouldn't that be something that would really wake some people up? I know wealthy people don't want to lose their money, which is why a lot of them currently are moving their money into cryptocurrency, including these institutions, because they're not earning anything on their dollars. And ultimately, if we're printing trillions of more dollars and we're devaluing that currency, then your purchasing power goes down. Let's say, super conservatively, that inflation is only 2%. It only goes up 2%. Gas increases, housing increases, goods and services all increase, and you're earning 0.24%. You're losing purchasing power, and your wages are not increasing, and they haven't over the course of time. This has decreased, wages have not increased, the dollar has devalued, and that is what led us to this point. Now, across the board, you might be able to find better savings accounts and rates in 2021. The best of which, at least from what I found, is 0.6% APY. So almost 0.5%, which is still a fraction of what it used to be. And other well-known banks, Citibank, 0.5%, Capital One, a little bit less than 0.5%, Discover, a little bit less than 0.5%. They're not really giving you anything back. They can't afford to. So they're going to continue to lower this, and you're going to have to pay more for goods and services. You're losing your purchasing power. And that is where crypto and decentralized finance might be able to help. Now, I'm not here to say that everyone should go and invest in cryptocurrency. That isn't the point of this channel. I'm not here to shill a bunch of bullshit altcoins to you. I'm not a financial advisor that's making commission off of telling people to do different things. I'm here just to educate. And let's think about the people that are absolute far end of the spectrum. They do not have the capacity to accept the risk at this time to invest in let's say, Bitcoin, because it shoots through the roof, it drops, a cryptocurrency, an altcoin could just collapse. No one knows for sure, and that's a lot of risk to take on, especially if you don't have a lot of money to invest. So what can we do right now to benefit ourselves and protect some of the money that we already have? I'm going to show you a company that is tackling that problem right now. It's not a sponsored video, but hell, if they ever did want to sponsor me, I would welcome it with open arms because I like this company. I use this company. And I also signed up for a couple things that they have coming down the road that I'm going to mention really quick. So let's take a look at BlockFi. So you may have heard of them in the news if you're following cryptocurrency at all, but if not, this isn't the only company doing this, but there are several other companies that are starting to follow suit. And BlockFi is focused on the future of finance. So the old way of doing things just isn't cutting it anymore, says BlockFi. With BlockFi, you can use cryptocurrency to earn interest up to 8.6 APY. Borrow cash and buy and sell crypto. There are no hidden fees, no minimum balances, no reason to wait. Now, I already did the math prior to jumping into this video, and 8.6 APY is 35.8 times that of 0.24% APY, which is the average that the banks are giving you right now. That's 35 fucking times. That is absurd to me that I would ever keep my money in US dollars and keep it in a bank as opposed to keeping it in some form of interest accruing currency. Now, where I mentioned the getting away from risk aversion, right? If you're not going to invest in the normal cryptocurrencies, here's what people can do. Now, the example I'm going to use is for US dollar coins. Now, I mentioned this before, in several of my videos, but there is a type of cryptocurrency known as a stablecoin. Now, what a stablecoin is just supposed to denote the value of $1. So one stablecoin equals $1. If Bitcoin jumps by $15,000 or falls by $30,000, that stablecoin still equals $1. And a lot of people use it, especially if they're trading or investing, to hedge their bets a little bit. So if I make some profit in a cryptocurrency, I'll pull some of it and switch it to US dollar coins. Let's say, for instance, USDC listed here. And then that way, if I think there's a dip coming, or if I want to invest in something else down the road, but I don't want to lose value in it, I can just move it over to USDC. But if I'm from the outside looking in and I'm like, I really want to invest in crypto, but I just can't risk that, dropping dramatically right now. I can't lose any of this money. Well, if I put $1,000 into USDC, BlockFi still accepts it. And if I hold it in BlockFi, just like I would $1,000 in my bank account, now I'm earning $128 per year, or over the course of 10 years, $1,282, because I'm making a certain percentage well beyond what I'm making with the bank. And this holds true for different cryptos. So I'm going to look at Bitcoin. We're not putting 1,000 Bitcoin in there because, hell, that is not a reality I could ever even fathom. But let's just say that you had 1/10 of a Bitcoin as an example. So this adjusts over time. This calculator isn't updated, obviously, but they'll update it as the price of Bitcoin rises. But I can earn interest on my Bitcoin as well, and a few other cryptocurrencies such as Litecoin, Ethereum, Chainlink as well. I believe they have Litecoin, but definitely Chainlink and Ethereum. Now, with my earnings here, there are also benefits if I'm holding a cryptocurrency such as Bitcoin, because not only am I earning interest now on my Bitcoin, but Bitcoin is also going up in value. So the price of Bitcoin is appreciating. It's going up. Unlike the US dollar that is going down, Bitcoin is going up. So I'm making interest on my cryptocurrency. My cryptocurrency is going up in value. I'm making money in two different areas. And then every time I get rewards, because interest accrues daily and is paid out monthly, it then goes into my BlockFi account. So let's say I earn this $476 in Bitcoin over the course of the year. Well, now I'm earning additional percentage on that money as well, because it's still in crypto and it's still in BlockFi. That is compounding interest, and it will outpace anything of just trying to sit there and say, well, I got 500 in my savings. Hopefully shit doesn't hit the fan so I can add another $50 every paycheck. This is just a better way to do that, in my opinion. Now, I always say go to their website, do your own research. Don't do it because I said to do it. Do it because you think it makes sense to you based upon your research and what you see and what you're being offered from your bank, but I think it would be helpful. And another thing I mentioned, and again, they're not paying me to do this, but Bitcoin is going to be available on their credit card that's coming out. So it's the first Bitcoin rewards credit card. Now, like most people, I have credit cards. Now, I try and pay them off, but I have been horribly in debt in credit in the past, trying to get through my day today. But now, even when I'm paying off my credit, I'm not really getting anything back. The rates are absurd, and if I get cash back, I'm getting like $5, $10 that I can put on to my next payment. Or what, you earn fucking Sky Miles or some shit like that. Well, on this credit card, I now earn back 1.5% in Bitcoin on every purchase that I make. And they have different promotions with it as well. Like if you spend $3,000 in the first 3 months, I believe you get a couple $100 worth of Bitcoin. If you then spend money on it from months 4 to 6, you get like 3.5%. Now, that's just me reading through all the fine print, but you'll be able to go in and see for yourself before signing up for anything. However, I look at it like this. So you're telling me I could have a credit card that gives me cash back in Bitcoin. So if I spend $100, I'll earn $1.50 back in Bitcoin. But not only will I earn that $1.50 back in Bitcoin, but it will go into my BlockFi account and I'll start earning interest on that $1.50. Not only will I get that $1.50 back in Bitcoin and start earning interest on that $1.50, but then if Bitcoin goes up in price, that $1.50 then becomes $3, then becomes $5, which I'm then earning more interest on. This compounding interest in decentralized finance is fixing a fundamentally broken debt-based system that is disintegrating regardless of whether or not we believe it is or not. And I think that most people are unaware of not only how shortchanged they're being by the system, but the new opportunities available to them, even if they hold their savings in a US dollar coin. You're still orders of magnitude better off than just holding fiat currency in a bank. And that's something I felt like I had to put out for everyone there. Now, I'm going to leave a link to BlockFi down in the description. I'm also going to leave a link to their credit card. It's a referral program. I'm not saying that you have to click on it. If you're interested on it, I would love if you did, because it moves me up the wait list to get that card. I want to use that card. I want to consolidate any credit cards that I still have left open onto that card, and it would help me out. But you don't have to use it. I'm just going to put it there for your reference. Ultimately, I think that this makes sense to me. If it makes sense to you, that's awesome, and I'm glad you're aware of it. And if not, at least you're aware of the information. Aside from that, please share this video to anyone else that might be sitting there with their savings and either they want to invest or they're afraid of the risk and they're not quite sure how that stacks up or where the benefit would be, even if stuff did go a little bit sideways, and help educate them as well. And leave a like on the video, and I will respond to any comments, or if anyone sends me any messages, I'm always happy to discuss this information to greater length. As always, I appreciate you guys for joining me on this episode of Viva La Coin, and I will catch you guys next time.